Hi there, welcome to Kneppy Invest and welcome to another technical update video. Exciting times we are in, and I'm not really talking about the market, although you could say that's true. I'm talking about personally. This morning, I finished a shift at 7 a.m. and I am now on a leave. Not a week's leave, a month's leave, 2 months, 3 months, 6 months leave. I am on leave for the next year. So the story here is about 6 months ago, I got a tap on the shoulder from management. Michael, you have accrued too much leave. You're going to have to take some, or at least plan to take some, so we can, tell our upper management that we are planning to, bring down your leave balance, because I haven't taken leave for a long time. And the reason I haven't taken leave for a long time is because when you're part-time, it feels like you're always on leave. I'll be honest with you. Anyway, so I looked at my leave, so recreation leave and also long service leave. I've never taken long service leave. I haven't taken rec leave for 3 or so years. I looked at the numbers and went, I can take a 4 years leave and have about 100 days leave up my sleeve after that 1 year. And I thought, why not do that? So this was about 6 months ago. I haven't really been counting down the days, and I don't think it really has sunk in just yet, or otherwise, it's no different. I'm just feeling no different at this point in time. Anyway, so exciting times for me, but really it's just another day. Anyway, in today's technical update video, we're going to go through lots of charts, but I'm going to show you something a little bit different. Well, actually start off something a little bit different. So usually I start off with the XJO. Today, I'm going to focus on the XAO, or the Ords. And there's one reason behind this, and we'll talk about that in a second. And the rest of the video is almost identical to all those other technical update videos I do. So we'll have a look at international indices, have a look at commodities, then crypto, which has had a really bad week, by the way, bonds, currency. We are all hoping the Australian dollar is ripping higher. We all hope the Australian dollar gets to parity with the American dollar and possibly goes even higher, because selfishly I am traveling. Well, I'm planning to travel to the United States in September, October, maybe a little bit of November, and I want it not to be too expensive of a trip. Anyway, so have a look at that. And then I do have about 10 to 12, I can't remember how many, individual companies charts that we'll have a look at. Okay, so let's start off with the XAO, the All Ords. Now, there's one reason I want to show you this. And I was just having a look at this the other day, and I noticed that the XAO dropped 8 sessions in a row, starting on Monday, 17th of February, and finishing on 26th of February. So from the 17th to 26th, it was down 8 sessions in a row. And then on the 27th, it was up a little bit, 0.34, before falling another 1.2% on Friday. So in fact, 9 sessions out of 10, the XAO has been down. Now, the reason that's interesting is because I just wanted to see how many times in the past has the XAO been down 8 sessions in a row. Now, you might be asking why XAO, not the XJO. And I have mentioned in the past, these are fairly similar indices. There's not much difference between the two, but there is a difference when you do compare the last 10 days. The XJO wasn't down 8 sessions in a row because there was one session on the 24th of February. It was up 0.14%. Hence why I'm focusing on the XAO. But they're fairly similar. There's not much difference between the XJO and the XAO, just subtle differences. So what I did is I went back through time just to see how many times, or how often this happens when the XAO is down 8 sessions in a row, and it doesn't happen all that often. I'm telling you, now I might have missed a few, because this was not a rigorous study. It was a fairly quick study. I went through the last, say, 17, 18 years, maybe even 20 years, and I found 3 occasions in the past this has happened. January 2016. In fact, what we'll do is we'll go, by the way, we almost had 8 not that long ago in December. I remember December was a pretty bad month, relatively speaking. There was no Santa rally. And we did see the XAO down, I think it was 7 sessions in a row. And I have seen quite a few periods in the past when it has been down 7, not 8 though. So the last time this happened Wasn't during the COVID-19 financial panic. Nope. The most sessions it was down a row there was 7. In June 2022, the most sessions it was down a row was 7 again. We have to go all the way back to 2016. Yes, 2016. And there was a little bit of, I suppose, a short bear market in 2016. And remember, I don't know if you remember this, so 2015 into 16, remember this was a down period for iron ore. In fact, iron ore hit the bottom of the cycle in January of 2016. So that's when the share price of BHP reached about $14. What a great time to buy BHP back then. I wasn't really thinking along those lines. And that's probably why the Ords had a pretty bad 2015 because of iron ore, maybe some other commodities as well. And it did reach the bottom in February 2016. But there was a period here, January 2016, when it did fall. In fact, it was almost starting from the first day of trading. Actually, no, it started on the last day of trading 2015, and there was 7 sessions down in a row from the 31st of December all the way through to, looks like, the 12th of January. Doesn't seem like that's 8, but that's 8 sessions in a row. It was down. Now, there's no signal here. I don't see anything happening that should concern us. So after that down period, the market actually started to go up about a month later. So I'm not saying when you do have 8 sessions down a row, negative things are going to happen in the future. So I also would say this is a fairly small sample size. We only have 4 instances since about 2005 or something like that, maybe even earlier than that. Anyway, so the next time was June 2010. June 2010. So we had bounced, the market had bounced fairly nicely off the GFC lows. That was in February, March 2009. I believe the Nasdaq bounced earlier than that, but it was a really nice rally. And then we had a bit of a weak period in June, sort of the middle of 2010. And if we zoom in June 2010, that a little bit of a weak period just after that nice rally. So again, 8 sessions down a row doesn't necessarily mean anything according to this. So when was this? This was somewhere. It would have been here between the 22nd of June and around about the start of July, the 1st or 2nd of July. 8 sessions down a row. In fact, the end of that 8 sessions down the row was the bottom of that little short-term downtrend. There you go. So maybe this is the bottom of a little bit of a short-term downtrend. Okay, and the only other time this has happened was during the GFC, and it happened in January 2008. Well, fun enough, 3 of these 4 instances have happened in the first 2 months of the year. Now, when we go back to January 2008, this was really near the start of the bear market. Yeah, almost the start of the bear market. In fact, you can actually say this was the start of the bear market. 12 sessions down in a row. And you can sort of see it right there. It is from around about the 3rd of January. So that's fairly similar than 2016, all the way down to the 22nd of January. Every single session was down during that period. 12 sessions down in a row. And this was the start of the bear market. And you'll notice there was some pretty nice rallies in this bear market. So that is something always to be mindful of. You're going to see rallies in bear markets. Yes, rallies in bear markets. And that's exactly what happened in 2008. So 12 sessions down in a row, 8 in 2016, 8 in 2010, and more than likely 8 in this. Well, actually not more than likely, it is only 8 because we had that one update. So it would have been interesting if we didn't have that one update. It would be 10 down sessions in a row, which would be fairly unusual. Anyway, it probably also shows you that possibly there is a bit of weakness in the market. Not a lot of buying the dip mentality when it comes to investors, and that just also shows you that there is a little bit of fear, just a little bit of fear trickling in the market. And so I think even maybe a few comments talking about this, maybe, I can't remember. I think I did see one comment talking about this. Oh, no. The buy the dip was in regards to Telix. Buy the dip following founder divorce. Trap again, damn Dickadata. Well, Dickadata and Felix and Telix are completely different companies. Anyway, but I do understand what you're talking about. Dickadata fell about 10% on the back of divorcee needing to sell shares, and share price did not rally after that. Anyway, let's go back to the XAO and let's have a look at what's happening right now. We have to go all the way back to the start. There's the COVID-19 financial panic. And there we are now. So if you have a look at the XAO, this particular indice is below the 100-day moving average. And this has happened twice in this uptrend back in, August 2024, during the yen carry trade debacle. It also happened not that long ago in December. It did fall briefly below the 100-day moving average, and in both instances, we saw a really nice rally. Are we going to see that again? Now, we do expect a pretty nice rally on tomorrow's session because of what happened on Wall Street overnight. We'll have a look at that in a second. So I do expect a nice rally tomorrow, but the question is, how long can that rally last? Okay, so that's the XAO. We won't have a look at the XJO because I'll just show you. That's the XAO. This is the XJO, very little different, just subtle differences, but those subtle differences, when you look at it broadly, there's not much difference between the two. I just like to, I don't know why I focus on the XJO. I used to focus on the XAO, but for some reason I now focus more on the XJO. I have no idea why. XSO, okay, so this did have looks like this might have been down 8 sessions in a row, was it? 1, 2, 3, 4, 5, 6, 7. Oh, that first Monday, 17th of February, it was actually up. So 7 sessions down in a row. And again, yeah, I'd say if anything, this is still in an uptrend, but we need to see the XSO rally from here. Nothing much to talk about this one, to be honest, but I do expect a pretty good day on Monday. Okay, and we also could talk about the XTL. Yeah, let's go through the XTL, which is the ASX 20. This actually does look a little bit more bearish, just a little bit, not a lot, but it has fallen quite a bit more below the 100-day moving average. And we have just started to see both moving averages, the 125, starting to turn lower. So this does have some signs of turning a little bit negative. Now, if we did have a red day over the next few days, so if we say maybe the next week is red, and that would mean the XTL actually falls below the previous lows we saw in December, that would actually be a fairly bearish move. So this is not as bullish as it has been looking like in the past. XTX, Tech's had a really bad week. In fact, if you have a look at Tech the last 2 weeks, it's down, down 1.87% 2 weeks ago, and down another 8% in the last week. You can definitely see that just by the daily chart. Every single day down a fair bit. And it's also at a fairly important level, a nice little support level right there. And it's right at that level. Looks like it might bounce off that level. And that's the previous low. This could be showing the first signs of a head and shoulders. Here's the left shoulder. Here's the head, but we need to see the right shoulder. So I'm getting way ahead of myself saying that sort of thing. And of course, the banking sector should have had a good week. Yeah, it should be up for the week. Nice little rebound in some of the banks. Yeah, so after being down 10% last week, up 2.58%. More than likely, I'd say this might be a bounce, like a dead cat bounce. Might be. We'll see. Okay, so that's the Australian indices. Yeah, it's a little bit worse than this time last week, but I wouldn't be rushing for the exits just yet. And I do think, this is just my own opinion, the chances of a worldwide recession are higher than what I was thinking last week. And I'll probably put the percentage at 10% chance that the world's going to go into a worldwide, broad recession within the next year, maybe next year and a bit. So 10%. Now, I'm typically quite optimistic. And this is probably the first time. Yeah, this is I think the probability of recession is probably the highest I have been feeling since, probably 2007 and 8. But I'll be honest with you, back then I didn't think much about it because the world going into recession back then didn't really affect me all that much. Now, since then, I haven't really felt confident that the world will be going into a worldwide recession. I'd say I'm highest right now, but it's only 10%. So why panic over a 10% chance? Okay, let's move on to the American indices, starting with the Nasdaq. And yeah, nice end to the week. After falling 2.75% on Thursday, it did rally 1.62% on a Friday. Now, the rally was not as good or not as significant as the loss. And even though it was a nice end to the week, overall, pretty bad week. So down 2.26% last week or the previous week, and down a further 3.38% in the last week. Now, if you have a look at the weekly chart, no reason again to panic. Still, the Nasdaq is in a beautiful uptrend, and we see these, 2 or fortnightly sell-offs quite often. In fact, back in July 2024, the Nasdaq had a 3-week sell-off, and then it bounced really hard. So 2-week sell-offs happen quite often, even in uptrends or bear markets. So nothing really to be too concerned with the Nasdaq, even when you have a look at the daily chart. Funny enough, just by looking at this, there's a really nice level right there. So around about there. So it has bounced off that level. In fact, it's bounced off that level twice now, back in January and also 1 month later at the end of February. So I'm not concerned yet about the Nasdaq. A bit of weakness in tech, but a good end to the week. And I'd love to see that end of the week carry on, or that momentum carries on into next week. That would be good. Dow Jones, probably, I wonder if this is now showing signs of the uptrend, maybe coming to an end. I'll just say maybe just coming to an end, maybe consolidation period for the Dow Jones. It's hard to say right now. I'm neither bearish nor bullish when it comes to this indice. If anything, I'd say I'd lean towards being bullish. Definitely, I'd be way more bullish if it did get above the highs, sort of like a double top here. That would make me way more bullish than I am now. So not as excited about the Dow Jones as I am about Nasdaq. What about the Russell 2000? Well, no. Definitely not bullish when it comes to this one. In fact, I'm probably a little bit more bearish. In fact, the Russell 2000 did fall below the previous lows. So this actually does look more bearish than anything else. We also have a moving average crossover. And that's the first time we've had a moving average crossover since the uptrend started back in late 2023. So this is the first moving average crossover for about 14 months. So you've got to pay attention to that. Now, you can see back in 2022, 2023, we had a lot of moving average crossovers. And when that happens, that is just telling us the market's going sideways. There's no trend at all. And that is what could happen right now with the Russell 2000. Maybe it is moving into a trendless period. Who knows? Or maybe this is the start of a massive bear market. Don't know. Okay, so that's the American indices. Now on to the international ones. Starting off the Nikkei and Hang Seng both down fairly big. Nothing much to talk about when it came to the Nikkei before this week. A little bit of weakness coming into the Nikkei, particularly because of Friday's session down 2.88%. And yeah, the last time it was this low, not that long ago, we're talking about September, but the Nikkei was grinding higher, very slowly grinding higher. And now it has turned around. So another moving average crossover for the Nikkei. And again, because the Nikkei has been going sideways, we've had a few moving average crossovers. So this could be just another one in the long chain of moving average crossovers, which can happen when the price of share or an indice goes sideways for an extended period of time. Hang Seng down 3.28%. This one was looking really good. Still looking good. There's no reason to panic right now. In fact, for the week, the Nikkei was, down. I thought it was going to be up, but it's down 2.29%. Let's have a look why. So we did have that big down day, 1, 2, 3, 4, 5. Oh, okay, yeah. Yeah, so it was down a fair bit on Tuesday, then a nice little rally on Wednesday. But anyway, no reasons to be concerned about the Hang Seng right now. It's still in an uptrend, a pretty nice uptrend as well. DAX still looking pretty good. This actually might be my favorite indice of the lot, except maybe FTSE. So it's interesting. European indices are not the sort of indices I would think would be looking really good, but yet we have DAX looking pretty good, and I am assuming FTSE looks good because it was up 0.61% on Friday, and I expected it to be down. It was up, and I wonder how much of that upness in the indice was because of Wall Street. But if you go back to Wall Street, let's have a look at the. So trading on the FTSE closed at local time at 2:30 a.m. Saturday morning our time, and you can see it rallying through their period. So it wasn't like there was a sudden rally in the FTSE. So I don't think this was led by Wall Street. And if we go back to, say, the Nasdaq, and we go to 2:30, yeah, it was not much happening in the Nasdaq, a little bit, but the main rally in the Nasdaq was towards the end of the day's trading. In fact, the last hour and a half, that's when we saw most of the momentum in the Nasdaq. Okay, so overall, probably, in fact, let's go back to the FTSE. And let's go to the daily, because I totally forgot to show you this. So overall, this is actually a pretty good chart. So we had the dip, and it's bounced off the 25-day moving average pretty nicely with a pretty good week for the FTSE. I'm not sure why there is strength in England or the FTSE and why there is strength in the DAX, Germany. But if I had to pick any of the indices, it would be between those two, and I might lean towards the FTSE, if anything. So maybe I should be putting my money into the English stock market. Now to commodities. It was a pretty bad week. Now, I'm making some assumptions in saying that. I do know there was one bad day at least, and I'm just assuming either side of that bad day, probably maybe one good day, another bad day. So overall, I'm just expecting a bad week for commodities. Now, let's see if I'm right. Starting with gold. In fact, what we'll do is have a look at the weekly chart, and we can see straight away. So gold, down. So gold did not have a good week, down 2.66%. Nothing to be fretting about gold right now. It's still in a beautiful uptrend. The last time gold had this bad of a week was not that long ago. It was back in November. It looks like 11th November, it was down 4.52%. So these sort of weeks happen quite often for gold, but no reason to panic just by looking at this weekly chart. Weekly chart looks fine. Silver, I don't know if I can say the same thing about silver. But it is in an uptrend on the weekly chart. Yeah, I'll give you that. It is in a in uptrend in the weekly chart. Probably not as good as gold. And when I say probably, I mean without doubt. It's not as good as gold's chart, but it's still moving up. Now that's a weekly chart. Daily chart, I have a feeling this is not as good yet. And in fact, if I have a look at the daily chart, I'm not that interested in this particular chart at all. There is a slight upwards trend here, but it's light. In fact, the price of silver is on the 28th of February is sort of the same it was back in May of last year. So it hasn't really budged, but there's been a little bit of volatility among that period, among the start and end of that period. Now to copper. And copper had a really good week about 3 or so weeks ago. Looks like it was trying to break out about 3 weeks ago. In fact, it was the middle of February, so only 2 weeks ago, and it has pulled back. It has bounced off the 25-day moving average to perfection. That was on the 24th of February. I'd like to see this go higher. I'd like to see this get above the highs we saw in the middle of February. So we're talking about $4.85, something like that. That would be a pretty solid move for copper. Iron ore, I'm not sure there's anything to see right here. It was looking a little bit better last week, but a pretty bad week for iron ore. In fact, I would say it's a heaps bad week for iron ore just by looking at this. So iron ore was down, 5.6%. And has that translated to iron ore companies? I don't know. I did have a quick look at the iron ore companies and nothing really triggered. in my brain to take a closer look. And yeah, iron ore down. So who knows? Don't know. And if you have a look at the daily chart, again, just like a few other things, there's no trend here. It's trendless at this point in time. Very close to moving into an uptrend, but with the price pulling back a fair bit during the week, I think we can nix that potential uptrend right now. Uranium just keeps on dropping. Well, not really. There was one really good day. I'm not sure what happened on that day. A really good day on the 26th. That was a Wednesday, up 4.6%, but it gave all that back the next day, down 4.49%. So I don't know why the market got excited on the Wednesday, but that excitement faded fairly quickly. By Tuesday, the price had gone back to where it started from. And overall, this is by far, maybe not by far, but this is definitely the weakest looking chart we have seen so far. This is a downtrend. Uranium is in a downtrend right now. And there's a possibility some of the uranium companies are looking a little bit better. I had a look at Boss Energy. Might as well show you that. I had a look at Boss Energy just to see what the chart's looking like. And this possible, just a possible, a bit of a, maybe a double bottom there. You could also say this is showing signs of maybe an inverse head and shoulders. There's the left shoulder, there's the head, and maybe if we do get it bouncing, maybe the right shoulder. Anyway, so uranium, not on my radar right now, just because of the, just because of this chart. It looks pretty ugly. Oil, below $70. There you go, below $70. However, I'm waiting for it to get below 65, and then I think there might be some value in oil and probably better upside than downside. Now, saying that, just because that might be true doesn't mean it's absolutely true. Who knows? Maybe oil will drop another $30 to like $30 a barrel. You just don't know. But the daily chart doesn't fill me with any happy feelings. Nothing really happening with oil. I say, okay, so the rest of the commodities I'll go through fairly quickly. Gas, do we have to look at gas? Yeah, there's gas. Lithium, I noticed a lot of lithium companies were down big. So something must have happened in the lithium space. And when I say down big, I do have a lithium watch list. Down big, lithium watch list. Yeah, it was just down big. Maybe it was just negative sentiment in the market. But for instance, Sayona down 13.6%. Liontown down 5.2%. Even Pilbara down 6%. Charts looking pretty bad there. Vulcan down almost 7%. Novonix down almost 9%. Lake Resource down 8%, so down across the board. We don't see much of a significant decrease in the price of lithium. So maybe I've missed it, but let's go back. Where is it? There it is. Maybe I missed it, but nothing down significantly here. Coal, just waiting to see if there's a bouncing coal. No, coal just keeps on dropping. This is actually a really negative move for coal. So before this move, which started in late November, about late November, coal was actually showing some good signs, but it's turned quickly negative. If you have a look at the weekly chart, it's the last time it was this low was way back in 2021. Okay, tin. Tin had a really bad day. Actually, I knew this. On Thursday, down 2.41%. Was looking good before that. In fact, I didn't mind that chart. So this could be a bar the dip situation for tin. I don't know. But at this point in time, after that big down day, not as much interest in tin. We have a look at Palladium. Again, nothing much showing here with Palladium, just going sideways. No trend at all. But cocoa has fallen a fair bit. It's fallen from 14,000 down to 9,353. So hopefully that all translates to better prices of chocolate at the grocery store. Okay, now on to cryptocurrency and Bitcoin down to $86,000. Now in China, we have seen a bit of a bounce. Some bigger volume coming through as well. So a really bad week. So when I say a really bad week, we are saying, we're talking about Bitcoin being down over 10%. But the most interesting thing about this is actually you can see on the weekly chart, there is a bit of a shadow behind the main body or below the main body, which tells us a little bit of buying pressure has come in. So not as much selling, a little bit of buying has pushed the price of Bitcoin up. And we could sort of confirm that just by looking at the daily chart. In fact, we'll have a look at the 1 minute chart. And yeah, oh, there's the bounce. Oh, no, there's the bounce. There's the bounce, 28th of February. Pretty nice bounce for Bitcoin. Not as the decrease was not as sharp as I thought it might have been. It was sharp, but not as sharp. I thought maybe the low had been reached in early trading, but no. Okay, let's go back to, I don't know why I moved from this. This is exactly what I should be looking at. And let's have a look now. Oh, let's go to the daily chart. Yeah. So Bitcoin was trading in the channel, and it has. Oh, where are we? Geez, there it is. It has fallen below that. We have also seen a moving average crossover. The last time that happened on the negative side was back in early or mid 2024, so it's not that long ago. And then the positive breakout was in September of 2024. Again, not that long ago. So we're talking about 6 months ago, and it rallied really nicely, Bitcoin, from about 60,000 up to over 100,000. We have seen this pullback. This could be a negative move for Bitcoin because we haven't seen significant bounce, a really big bounce. We did see a big bounce on the Friday session, but nothing much since then. It has bounced a little bit, but not as much. I'd like a bigger bounce. Put it that way. I like a bigger bounce. Ethereum, this probably looks really weak. Yeah. In saying that, look where Ethereum has found a little bit of support. You can see the support just because on these one-day candlesticks for Ethereum, you see a long tail below in the main body, and that's telling us there is some buying coming in, some buying pressure, and there's not enough sellers to to sell. There's not enough selling sellers to satisfy all the buys, and that's why you see the price of Ethereum rise, because if you have too many buys, not enough sellers, the price will go up. And I think that's what's been happening, and maybe because it's getting close to this support level, which is just above $200,000, and it's been at that support level not that long. Not that long, to be honest with you. It could be not the best quality support level, but it has acted as support the last about 8 months on at least 3 occasions. Yeah, 3 occasions. Now on to yields. 30-year just keeps on dropping. This is telling me a few things. The first thing this is telling me is that looks like the bond community or the bond market is thinking, we're concerned about inflation, and inflation might lead to high interest rates. Now we're a little bit less concerned about inflation. Doesn't mean it won't happen, but we're more concerned about the economy and the possibility of increasing unemployment. And that would make sense if there is increasing unemployment because of what Doge is doing, just firing whoever they want to fire. And there will be an influx of people seeking new employment, and that could lead to an increase in the labour or the unemployment rate. Anyway, so the market or the bond market is thinking that might be the case. We might move into recession, and in a case of a recession, what's going to happen is interest rates will drop. The central banks wants to stimulate the economy, wants to get people buying more and more, and the best way to do that is to lower interest rates. Not to zero. I think that's a bad mistake. And finally, the Aussie dollar. Oh, Aussie dollar has turned a little bit negative the last few sessions. It's gone from 64 cents to 62 cents. It's going in the wrong way, It is at support. There is a support zone at these levels. So, I just got to deal with it. Okay, now, what I'm going to do is I'm just going to there we go. So I do have about 10 or 12 companies. In fact, I can count them right now. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 companies charts to show you. These are charts interesting for various reasons. I'm looking at the tickers right now. I don't own any of these. I have traded in the past a few of these. And the question becomes, will I take a position in any of these companies based off the chart? We'll start off with a company called Maxiparts. They provide parts for buses and trucks. I am a little bit guessing there. And maybe servicing as well. I don't know. Anyway, so why am I interested? And when I say interested, I don't mean, wow, this is the best chart ever. Why am I paying a little bit more attention to Maxiparts? Well, we can see the downtrend looks like it has come to an end. The downtrend has been at play since the end of 2023. Share price of Maxiparts has dropped from $2.75 all the way down to $1.88. So if it gets back up to those levels, we're talking about a 50% upside. If, there's a big if there. And the reason I'm saying that is you can see we've had a few moving average crossovers. That's okay, because that is telling me we're starting to see a shift in sentiment and a bit of shift in the trend of the share price. And the share price has reached a long-term high, talking about 6-month high at least in the past week. So it looks like maybe the results were good. And I don't mind this chart at all. Will I take a position in Maxiparts? Probably not. There are a lot of opportunities on the market. And I do prefer, if I am looking at an opportunity, to buy a company that I do think is a better company. EVT Ltd, talking about better companies, not sure if I would classify this company as a good company, but they do have cinemas. Is it Event Horizon? Not Event Horizon. That's a completely different. Event something. I'm assuming that's what this company owns because it looks like EVT is Event. And they also own hotels, something at Threadbow or something. Anyway, so they did release their results during the week and the market liked it. Share price has popped up and look at that volume, really nice volume coming in. And the market had this right. Share price actually moved into an uptrend back in November at about $11 and was just grinding slowly higher until they released the results and share price has popped up. So a potential play here, particularly if the share price pulls back. Yeah, that's all I'm going to say about EVT. Maybe not the trade for me, but I could understand why someone would trade this if they wanted to. The reject shop. The reject shop results. I thought they were okay. I thought they sounded, the commentary was a little bit better than I would have anticipated from the reject shop. Maybe more people are now going to the reject shop because cost of living pressure, don't know. But the company did release, I think, a okay report. And the most important thing, the market liked it. So share price popped up, what was it, 19.45%, and has been going sideways ever since. Has pulled back slightly, $3.35, but that's okay. We haven't seen significant, relentless selling in the reject shop share. So is this a potential? Maybe. If this is the company for you, if you have a look at the weekly chart for the reject shop, it's an ugly, ugly chart. Now, this is not the sort of company you own for the long term. Okay, so more than likely, I probably won't participate in the reject shop trade, but I could definitely see why someone might. I don't mind this chart at all. Now on to City Chic. This is definitely in my watch list. Paying close attention to this. We've got the moving average crossover. They release their results. I think they were being a little bit naughty because I can't remember exactly why. But anyway, City Chic. I have no idea what I was talking about then. It's just a little bit of fatigue coming along. Anyway, so City Chic is looking good. We've had the moving average crossover, release results. There was a nice little reaction on results right there, the 27th of February. I believe it was the 27th of February. I could be wrong, but I believe it was because I do remember the reaction was pretty good for this company, 27th of February. Yes. And just before that, we did have a moving average crossover. So it's really good that the company released results and we didn't see a really negative reaction, or I would have preferred a much more positive reaction, but it was good. So this is looking much more interesting right now. City Chic. Now, I did choose City Chic in my 2025 stock picks. So I am thinking that there could be some nice gains here for City Chic moving forward. But again, it all depends on if we do move into recession, but it's only 10% chance. Dusk. Well, yeah, Dusk. I was trading this one. Share price started to move lower. I thought I'll just get out ahead of their results. That was a bad move. But again, you're not going to be 100% perfect with your decision making. So I did get out, and then the company did release, I think, pretty good results, and the share price has popped up. Share price $1.32 is the highest the share price has closed for, I would say, for at least 2 years. And we're talking about, yeah, almost 2 years, back in May 2023. So this is a definite potential trade. And look at the volume as well. Nice volume coming in. So a pretty good chart for Dusk Group on the back of the results. The results were received quite well from the market, and I don't mind the chart either. In fact, I'd say I like this chart for Dusk Group. Smart Group. This is another one where share price was just grinding lower. Company releases their results, share price popped up, and I don't mind what I see after that pop up. So the share price popped up on, looks like the Wednesday session, yeah, up 7.4%. Was down a little bit the next day, down 1.42%, but then was up the day after by 0.72%. So this could be the start of a new uptrend in Smart Group. So I also like this chart. And the last time share price was this high was back in October. So at least we do have a 3-month high for Smart Group. So don't mind this chart either. And also the volume is pretty good as well. Nice volume coming in. So the people like it. The market likes it. Media, OOH. I did discover that Media is just not, ooh, look what you're doing, media. It stands for something. Outdoors, outside, house, outdoors, outside, house, something like that. And Media stand for. Let me have a look. Stand for. Out of home media, close. Outside, out of home media. There we go. So OOH is out of home media. Anyway, so we have learned something, and I'll probably forget that. Anyway, so Media did release their results. This is the sort of thing I'm looking for. A really good week. Look at that volume coming in on Friday. Massive volume coming in. I'm a little bit concerned because if we do see a bit of weakness in the economy, the first thing companies will push or pull back is their advertising spending, which could affect this company in a negative way. But this is a beautiful shift in trend and sentiment. Media, I like it. Like the volume as well. Megaport. Do I like this one? I don't mind this one as well. My main concern about Megaport is just how volatile it can be when they release results. At least they're not releasing results every quarter. Now it's every 6 months. And I don't mind how the share price popped up, and we haven't seen a lot of selling coming in. Share price has drifted low a little bit, but just a little bit. So down to $11.12. It was, the share price did get as high as $12 on the day they did release the results, but I don't mind this chart at all. Not my favorite, but yeah, it could be a trade here. I don't know. On to a recent listing, a company called Alfabs. Nothing to do with Alf the alien or abs, the workout. It's a mining services company. Don't know what they do with mining services. Manufacture, repair, overhaul, servicing, and hire of underground mining and ancillary equipment. There you go. I just like this chart. This is sort of chart I'm looking for when a company lists on the ASX. Well, not when they list, but after a company has listed on the ASX for a period of time. For Alfabs, it has been, we're talking about 7 or 8 months, and we have seen the share price just grind higher So this is a nice looking chart. The one thing I'd like to see is some higher volume coming in, some consistently higher volume. We haven't got that just yet, but the chart looks nice for Alfabs. This is definitely a company I'd want to research a little bit more, just a little bit more. And finally, NIB Holdings. This is another potential breakout. A lot of interesting reactions. They were allowed to increase their premium. That's why the share price popped up, I believe, on Thursday session. So up 6.3% on that day. Share price popped up 12.5% on the release of the results. Share price is at least a 3-month high. In fact, share price is now at a 6-month high, exactly what I want to see. We've also have a moving average crossover. So many things to like about NIB Holdings. One of many, to be honest with you. Anyway, so that's all I have for this particular video. If at any time during the video I did not make sense, I'm a little bit tired. I'm going to sleep very well tonight, which always happens after a night shift. I sleep fantastically well. Anyway, if you have any questions, any thoughts, leave those in the comment section of this video. Other than that, I am not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.